Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you as we delve again deep into markets to figure out what the hell is going on out there. Before we figure out what the hell is going on, we're going to talk about the disclaimer, which says that everything we're going to discuss this evening is general advice. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of that general advice, you should consider it carefully. And if you're unsure, seek the help of a financial professional to determine its appropriateness for you. It's always important to remember that, investing, trading, it's risky. Markets may not go the way you want them to. You could lose money. Always, you're responsible for the stuff you do with that money. It's not me. The agenda for this evening is very simple. You'll type in the stocks if you want to have a look at tonight. I'll give you my best technical analysis reader, or you can ask me anything about the realm of trading in general. So methodology, money management, mindset, and I will do my best to answer those calls. Let us, before we get started, a point of admin. This always happens, doesn't it? I end up in the wrong Chrome screen and then I have to fight to get to the right one. And sometimes it takes a bit of forceful action. There we go. Wasn't that forceful tonight. Okay, good news. This is the video user guide that we created last week. If you tuned in very early, I have edited it, cut it down to about 12 minutes to just the stuff you need to know. And you can see here in the description, we have got the links for the ChartWatch daily scans list, which are fully operational now, and the macro watch list there as well. So futures and forex, indices and bonds. If you have no idea what I'm talking about, that's okay. I'll send you the link to this video after this presentation, so you'll get the normal video link for tonight's content, plus this one as well. Click on play and it will all become clear. You'll know exactly what to do. But for the people who do know, you know what that all means. I think it's pretty straightforward. Let's keep going with the regular content for tonight. So what have we got here? We have the Nasdaq Composite Index, our benchmark in the US. So this helps us determine how much risk we should have at any one point in time. If you're trading US shares and Aussie shares, let's say you've got equal amounts of capital across both markets, you would use this portfolio management indicator for that particular amount of money you've got invested in the US, and then we'll talk about the Aussie one in a second. I shouldn't need to say very much about this because it cannot possibly look any better, can it? I mean, it's just onwards and upwards. It's a beautiful, steady short-term uptrend with 4 white candles in a row. When was the last time we got 4 white candles in a row? It doesn't happen that often, does it? And, pretty decent little demand side showings, but they are little, aren't they? But still quite happy with those. The price action looks like higher peaks and higher troughs since 17,767. We've closed above 18,328, a potential point of supply, and we've closed above it pretty well with only a very tiny upper shadow on Friday's candle, and that puts us in sight of 18,671, the ATH, or all-time high, as it's also known. The short-term trend ribbon, that's the light green zone. It seems to be offering dynamic demand. It's a zone where the market participants, that's right, come in and tend to buy more than they are selling at that point in time. Excess demand. Why is that light green ribbon that way inclined? I don't know. It just is, and that's good news. And it's doing its job. And so is the long-term uptrend ribbon. You can see here, not far off it on that one. I'm going to pay that one, certainly pay that one, and 100% pay that one. And if you didn't know me, you wouldn't know that the market was destined to turn around in these zones. That's rubbish, of course. The market's not destined to do anything. It's pure coincidence. But like I said, it's a win for us. We'll take it. Let's head over to the Australian market now. The XJO looks pretty good as well. It's close to that all-time high as well. And the candles are okay. A little bit of an upper shadow today, but not unexpected, given we are very, very close to 80 to 86, a point of supply where we'd expect there to be a little bit of selling. So all very, very steady as she goes, very normal price action, very normal behaviour here. I forgot to tell you we're I would be, and I'm FRP across both. I can't see any reason why you wouldn't be FRP. That doesn't mean you can't have a few protective shorts in the system. Like, why wouldn't you? If you can find some really nice charts that are heading down, we just use all of our normal long methodology, turn it upside down and inside out, and why wouldn't you have some exposure to the short side just for a bit of insurance? Let's do the whip around the grounds to see if there's anything out there that's looking untoward that could push us off this thesis of full risk position. Might frighten some people. Geez, Carl, there's so many things that could go wrong in the world. There's what's going on in the Middle East. There's the US presidential election. I'm just worried about valuations in general, because I've read something on the internet how the market's never been this overvalued before. Tech stocks, are they just an increasing influence on the major indices, of course? And then you've got Warren Buffett. Warren Buffett's been selling shares. You can't forget old Warren Buffett, Carl. And there's just so many things to worry about right now. And I would say, hey, you do you. Of course, that's up to you. But I would suggest all of that information is in the market. All that information is stimulating people who have cash to want to invest that cash in the market. They know that stuff, and yet they are still piling their cash in. How do you know they're piling their cash in? Look at all those white candles. Look at those upward pointing trend ribbons. Look at the higher peaks and higher troughs, and the fact we're near all-time highs. That cannot be argued. The other part of the equation, of course, is that people who have shares, if they were really that concerned about all that other crap we were just talking about, they'd be selling those shares like crazy, and it doesn't seem they are, so they can't be too concerned. Now, we don't know what's going to happen tomorrow. Of course, there could be some sort of stimulus that causes everybody to want to sell and nobody to want to buy all at the same time, and even then, they would need to want to sell at much lower prices than the current price, be motivated to do that and not be able to find the demand in the way. Lots of things would need to happen, but we can't see it, so let's not worry about it. That's my opinion. There's nothing to worry about on the Russell 2000, nor is there anything to worry about on the tech-laden and influenced, magnificent 7 influenced S&P 500, who's got a PE at the moment, one-year forward PE of about 22, which if you go back through history, potentially, yes, there have been major corrections when the S&P 500 PE is at 22. I'm not saying that to scare you at all, because it's irrelevant to me. It's just a narrative, isn't it? And you know I don't do narratives. Let's head over to Europe. Nothing too sinister there. Hey, there's no European financial crisis that I can see on the horizon. In fact, the DAX looks brilliant, and that's good. We want coordinated growth in stocks. We want coordinated growth in risk on. That's what we want to see. We want to see any part of the market, ideally, where people are nervous and it's all fine here. And what we've got now that we haven't had in such a long time, of course, is the Asian market starting to actually come to the fore. Whether you believe it or not, hey, do you believe China's actually going to deliver meaningful, long-lasting, enduring stimulus? Do you think they're going to, turn the spigots on in terms of debt and give local governments who are just ridiculously indebted even more debt? It is a command economy. Potentially that is a possibility. But there is a thing about forcing debt upon indebted people. They tend to not want any more debt. But we digress. The Nikkei is looking better. It doesn't have to look fantastic. It just needs to look better than what it was. That's not as nice as I would have liked, but it's not going to impact anything, just if you happen to have that ETF that we had looked at in recent weeks. And that one's, of course, the Shanghai Composite is fine, nothing to worry about there. And, straight lines up, we always like those. Shallow pullbacks, we like those. Is it a shallow pullback? Well, it's not more than 50% of the rally, so that's okay for now. We did the Aussie market. We might just quickly have a look within the Aussie market at the best sectors. I don't think consumer discretionary is the best sector. It's not the worst. I certainly don't think energy is the best sector. It's close to the worst. Financials are fine. Actually, financial sector index came up in my scan list today. So did ANZ and a few of the other banks, which I didn't put in the plus 1/3 list. I put ANZ in there, but interesting to see that come around. And that could be the missing piece of the puzzle, because for so long, don't forget, we had financials pumping, and resources completely missing in action, and yet we made a record high. Healthcare helped, discretionary helped, tech helped. And then we've had a month and a half now of financials going down. You can see on the chart there before this little rally, and resources pumping. They haven't been pumping at the same time. If we can get them to pump at the same time, I tell you what, ladies and gentlemen, we are going to do 9,000 pretty much with a bullet. You heard it first here. Gold looks very good there. We'll look at the gold chart in a while. Healthcare, CSL came up on my scan. I gave it a third today. That's very interesting. As I said, if we get resources, financials, and healthcare pumping, we're going to get there very quickly. Technology looks fine. Maybe that might be the one that takes a little bit of a breather, but not to say that there's any obvious signs it will. Resources, interestingly, pushed up through the trend ribbons. How about that? Come back, tested, and held the trend ribbons. Again, you wouldn't. Why would it stop? Why would it stop here? Why? Ladies and gentlemen, can somebody please tell me why the pullback should end right at my long-term trend ribbon and then immediately the price should bounce and the short-term trend ribbon? I don't know. It just does. And that's good stuff as well. Resources actually pushing a little bit below the ribbon, but let's move on very quickly. You didn't see that. And property is fine. Staples, neither here nor there, but not getting excited about that. We do have an ACCC investigation into the staples, right? XTJ is fine, utilities is fine. So I think we're okay. I think we're pretty good there. Let us, while we're here, have a quick look at the, whatever these things are called again. And when I figure out what I'm trying to change here, I'll remember what they're called. They're called base metals. That's aluminium. Bouncing off the short-term trend ribbon support there, short-term trend up, long-term trend up. That's good. We're looking at hopes of global growth, a global growth renaissance here. Who could believe it? I can believe it because the trends have turned green. If there's an element of skepticism in my voice, please ignore it. Iron ore has pushed up to the long-term trend ribbon. That long-term trend ribbon has started to change colour. Maybe even this one's going to find some dynamic demand here and push through. What will that do for our market? It's the right time of the year. You would have read my seasonal iron ore seasonality article on Market Index. If you didn't, Google iron ore seasonality, Coal Capital Market Index, and you'll be able to read it. Even nickel, ladies and gentlemen, nickel has reached its long-term uptrend ribbon. It's holding that ribbon now. It's acting as dynamic demand, and it's pushing up. That's interesting. Lead, well, it's neither here nor there, but who cares? Tin looks very good. And zinc, I might have said last week, looks the best. It still does. Lithium carbonate still very much in the doldrums. I can't see any major low being put in just yet. Look, 69.7. It's too early to tell for me. I think if we're trading with an 8 handle very quickly, then you can all aboard lithium again. But it'd have to happen quickly, and I just can't see it based upon the candles that are about to appear there. That is probably enough here. Let us head over to the Chrome screen, where we're going to go to the TradingView window, and just to prove to you, ladies and gentlemen, that the uptrend lists are functioning. That's the trends, the scan lists are functioning. Here's the uptrends list, and there's the downtrends list. Let us maybe have a quick look through the uptrends list. Why not? Now is as good a time as any. 360 is on the list. I'm pretty sure I shortlisted that as well. Aussie Broadband is on the list. Great looking turnaround play. Again, look how the short-term uptrend ribbon is now cradling that price action. Bunch of white candles at the end there. Looks very good. Maybe a little bit more volume at the end would be better, but it's pushed through that supply zone, so probably okay. I like this one, Adriatic Metals. I like the last couple of candles there. I think that looks very good again as a turnaround play. This one I gave it the benefit of the doubt, just the pedigree of the previous trend. ANZ didn't quite get to long-term trend ribbon, but that's okay too. Appen, how about that? Certainly we had a few minus 1/3 there, but I think you're adding risk back in. Accent 1, that was a bit iffy. I probably could have left that one out now in hindsight, but it looked better on my AMI broker chart, let's just say that. That's the Global Banks ETF. Codan, there's too many here to go through, isn't there? Maybe we will. I don't want to show you my shortlist because that's kind of defeats the purpose, doesn't it? That's a really nice looking turnaround play there. CTM, hey, you've got the list, you can probably do it. Let's keep moving then. We won't do the downtrends. We were going to head over to the other watch list, which you now have access to, and we'll head over to futures and forex first, and we'll kick off with silver, which is same as last week. It's stuck beneath that key 32.42, 33.50 zone. It's being supported by 30.03, 30.65. If you know my model, you know where I like to draw my support and resistance lines, don't you? I mean, they tend to work pretty well. I think you can figure out where to draw them if you're going to maintain your own charts like this. It's vibrating between where we would expect them to vibrate. I've been hearing a little bit of talk on social media about palladium and platinum, albeit from a bit of a I don't know. It's a handle that I had stumbled across. They responded to one of my posts, and the name of it got me interested. And they've got more followers than me, and they seem to be preaching about all sorts of bloody things. And they said this is their highest conviction trade at the moment. Platinum and palladium. And ho-hum. What do I know? Gold, I think, looks very good. Pretty happy with that one. Skate to the puck. He told me, skate to the puck. Copper futures look okay. Okay, not great. Holding onto the short-term trend ribbon. I wouldn't want to see them break beneath 439. That would be disturbing. Iron ore looks okay. Wouldn't want to see it close beneath 103.05. Until then, probably okay. Notice the copious use of the word okay there. Uranium looks okay. It's at the short-term trend ribbon. Needs to push through, but it doesn't seem to be doing that right now, but happy to give it the benefit of the doubt. Natural gas in the doldrums, as is I wouldn't call that doldrums, but it is coming back again a little bit off that 80, 84, 81, 16 zone. Very neutral there. Let's have a look at thermal coal. Still 50-50 for a potential break through the uptrend ribbon. Keep an eye on that one. Very interesting for me. And not a lot going on there with the coking coal price. Let us quickly check out bonds, and then we'll get to your requests for the evening. We're going to start with the US 2s, and we're just in that little bit of a limbo land between the very strong non-farm payrolls report that came out Friday the week before, which obviously spiked yields. A whole interest rate cut from the Fed was factored out this year, 25 basis points, and we've also seen a significant reduction in the expectations of yields, cuts from the Reserve Bank as well, a rising of our yields through the curve. And that's okay, because it means that the US economy isn't in the toilet. Where would I like to see this go from here? Sideways would be fine. I don't think we want up anymore, and down would be better than up. Let's just say that. But I think sideways is actually the best possibility here. Japanese yields continue to edge higher. Don't know when's the next Bank of Japan meeting. Keep an eye into that if we don't speak until then. And Aussie yields are markedly higher and looking quite bullish to the upside, which is not ideal for our market, but it doesn't seem to be bothering stocks at the moment. Okay, let's head over to your requests. We're going to go to the offline ones first. And I have actually this one here, Siren Gold, which is from Craig. And Craig actually didn't give me any commentary, just pointed it out. So it looks very interesting. I think if it had come up in my scans, I would have shortlisted this one as a turnaround play. And you know me, I would have shortlisted it on that day there on that white candle. It didn't come up in my scans. I'm guessing because it hasn't been meeting the liquidity filter. That's my guess. But it's fine with me. Just because it's not meeting the liquidity filter doesn't mean it's bad. It just means it's not meeting the liquidity filter. So that's a plus 1/3. That's a plus 1/3. Just bear with me for a second. You all know by now I'm not allowed to write in that window. I'm only allowed to write in this window. So let's try again. Let's go here. As I was saying, plus 1/3 there, plus 1/3 there. Today there's nothing to do because the candle doesn't warrant it, but it certainly doesn't warrant us getting out of any risk at this stage. The candle is not enough of a supply side showing, not in its size, it's very small, and not in its nature. That is the upward pointing shadow. The upward pointing shadow, don't forget, all upward pointing shadows are pointing to areas or prices, more specifically, where there's excess supply. A shadow must point to excess supply. There is no other way to interpret it. Okay, you're pushing up, pushing up, pushing up, pushing up. At one stage, that was a white candle. That's where the one I've highlighted. And the only way you get from that full white candle at one stage to that black candles if supplies come in. Likewise, shadows pointing down must point to areas of excess demand. You can see the interaction here with the uptrend ribbon and how that excess supply, that latent supply, was waiting in the system for it. Okay, so it's not enough of a supply side showing to overcome or overwhelm or nullify these two fantastic demand side showings. Okay, so it's an FRP for me, and you could go next to high close. Happy to add a third FRP. Next high close plus 1/3. Okay, let's go to Colin. Colin's got RRL, which did make the shortlist, as you'll see when you look at it on TradingView a little bit later on. I'm pretty happy with it. Clearly, we're approaching a big point of supply. I think the point of supply started back here, and it was tested unsuccessfully over here. Right, so that's the unsuccessful test. I mean, this is, I think, its creation. I'll zoom out a little bit. You can see it's a little bit more than that, isn't it? There's also one up here as well. So, look, keep that in mind if you're an RRL fan. I'm an RRL fan. I love this last candle here. I think I shortlisted it here. I put it in as a feature chart on that one, I'm pretty sure. And it looks even better now. And it's not showing any signs that this is a point of supply. Okay, this is only a point of supply if we see supply up there the next time we get there. And I put to you, is this a supply side candle? No, you couldn't get any more demand side than that, but it's a long white candle, lots of buying. It closed on the high, the buying was sustained into the close. People weren't worried the price had gone up a lot. Normally, well, not you anymore, but you a while ago would have looked at something that was up 4 or 5% a day and said, well, I can't buy that. That's gone up too much. Of course, now you look at it and go, well, isn't that amazing? That's a big white candle. I love big white candles. And that's the way I look at that one. So pretty happy with that. As I said, plus 1/3 is automatic. FRP, if you've got it, plus 1/3. And this ended up, if I give it away here, was shortlisted and shortlisted again. Okay, am I worried? I nearly forgot. Am I worried about the big point of supply? A few people are probably thinking, well, Carl, yes, I get you like that candle. You like the fact that there's no supply manifesting at this point in time, but you yourself, at your normal zoom, you couldn't see that other point of supply. So is it relevant? Yes, it is relevant. Remember when we go to the US, because we tend to be dealing with stocks I'm less familiar with, and I go to the weekly chart almost immediately to see, I say, let me look out the corner of my eye and see if there's a big level I need to be worried about. You can do that, absolutely. And it's just a matter of just clicking a button and just going to the weekly chart here and seeing, okay, well, actually there is a point of supply lurking out there. How long ago was it? Well, about 18 months ago. I mean, the longer, the further back it is, the less relevant it is. Certainly if it's off that screen, it's completely irrelevant. So it's real, it's credible, it's there. And how does it impact this setup? It doesn't impact this setup. What it impacts is how this setup rates against all the other setups you're going to do. So this setup in itself is fine. It checks all the boxes, but that's the I guess the trade or the trade identification. When you get to the next step, which is the Tradecraft, that is determining an entry, a potential stop point. Okay, we can never know a stop point because we can never know the signals that are going to push us out, but we can certainly say, well, I would like to put my stop loss beneath, a credible point of demand. I certainly see today's candle as a credible point of demand, the low of that. Okay, I certainly see any previous peak historical point of supply as a point of future point of demand, future point of supply, future point of demand. I noticed on my whiteboard in my office, did you write that on the whiteboard about how does a previous point of zone of, did you write that? Is that a question you have? Huh?
I forgot to ask you.
You forgot to ask me. My son sits, my son's 12 and a half. He sits in on all of these sessions, and he's getting quite good actually. But he actually wrote on our whiteboard in our office here. And I'll read it out to you. How does a previous zone of supply become a zone of demand? And I just thought, what a great question. And I've probably explained it to you before, but let me explain it to you again very quickly. Obviously, as we're heading up here into this point of supply, nobody knows it's going to be the peak, all right? Everybody thinks it's fantastic. We're all buying, we're buying, we're buying. We all know that feeling. There's probably lots of people that are nervous about it going up. They probably felt they wanted to buy at 160. They didn't buy it at 160. They were nervous. Then it went up, and they thought, "Oh, I can't buy it now." And they go, "Oh, geez, I really." Because they love this. They love Regis. They know the story inside out. They've read all the broker reports. They've done all the fundamental research. They couldn't buy it, and it finally gets to this day here, and they just cave in. They can't take it anymore. It gets to $2.09, and they buy it. Okay, and guess what? It closes down at 207 on the day. Off a couple of cents, and they start to get a little bit of that sick feeling. And the next day, it opens at 205. Oh no, I've done it again. I can't believe it. Why didn't I just buy it at 160? Oh, and then, it's now down here, and it's 2, and they're just feeling a bit sick, and a bit sick, and a bit sick. Let's say that it gets back up to. Now, I've kind of put myself off. I've kind of lost my train of thought here. The whole points of supply, it's people who get out. Yes, I think I'm on the right track here. It gets back up on this day. It has a high of 208, and they sell out, isn't it? They sell out at 208. They got pretty much break even. They lost a cent. They lost a bit of brokerage, but it's a big pat on the back. Well done. I hung in there. I stuck to my guns. I didn't panic out. And I got break even. And then how do you think they feel on this day here with that decision to get out? I'm just, it's one subsection, one example, but there'd be lots of people potentially in this boat. And they feel sick about it. Oh, I knew I should have hung in there. Why didn't I hang in there? I knew this was going up. It's Regis. I love this stock. Why did I get out? Not all of them, but some of them will want to buy back in at a point that, again, eliminates, much like they got out at break even, eliminates their mistake. And what is that point? Well, we know a lot of people got out here. Look, where I mix myself up is I'm talking about a person who got in here. But we also know that a lot of people got out here as well. Okay, how do you know a lot of people got out there? Well, the price went down. There was excess supply. And I've just given you an insight into, I guess, another psychology, of a group of participants where they maybe bought in here and then got out at break even. But the bottom line is that both of those groups will be looking at this zone as a point where it undoes their mistake of getting out too early. So they will start to create demand, this idea of latent demand. Latent is just a word that means it's not there yet, but it could be there in the future. And that demand will start to pick up as we draw closer and closer to that zone. Now, the big fund managers also are trying to buy pullbacks as well. They prefer, if they can, sometimes they don't have a choice, they prefer not to buy on a day like today. They prefer. If they can buy pullbacks, that's better, but sometimes they have no choice. It's just too hot, it's just too good, and they need to get positions for their clients. But they know, because they like to buy in pullbacks, they know there's this other group of people that will want to demand there as well. So they will probably try and get in ahead of those people to keep them out of the market. They prefer that latent demand to stay in the market after they've entered. And I just think you get this building of groups that are looking at that area as a place where they really want to be demanding into a pullback. So we do find, and look, what I've given you is a narrative. That's my hunch. That's my view on why it occurs. There might be a completely different view. But my view is there are a bunch of people who made a mistake there. It's all to do with ex post regret in the market. That is where that mistake is eliminated largely, and they will start to undo that mistake. And then you've got the longer term people, the big fund managers who are looking to accumulate into pullbacks, and they will try and get in front of those to keep them out. Does that make sense? They're shaking his head. Oh, well. I'll have to take that one offline. What I was saying is we're talking about the Tradecraft here. Go back, rewind, go back. Tradecraft, where that overhead supply zone becomes an issue, is not at the point where you're going, that's a great trade or a great setup. That is a great setup. It's at the point where you're going, oh, it's a great setup, but I've only got one-to-one. I've said, how do we start talking about this point of supply? Where do I want to potentially set a stop loss? How am I going to work out what my reward to risk is if I don't know what my risk is? Okay, I can see my reward. That's clear. It's up to here. I've drawn a pink rectangle there. That's easy to do. It's easy for all of you to do, to draw this pink rectangle, this one up here, okay? That one there. But that's my reward. How do I determine my risk? Okay, try and determine your risk by seeing where you might have to get out. Now, we don't know where we're going to get out because we don't put stop losses in like other people, okay? We use signals in the market to tell us when to get out. So where would those signals be most likely to occur? Well, a big black candle that closes beneath this wonderful demand side candle would tell me that demand is gone. That's concerning for me. So, you know, I can think about getting out here. I could think about getting out beneath that point of supply. That's why we started talking about this whole analogy. I could then say, well, if I was out half here and half there, you know, I know we get out in thirds, but we certainly might have, you know, 2/3 out before we get to here. You get what I'm saying, right? Let's say we took those two and we split the difference as a number and said, well, our average exit would be here. My entry's here. I know maybe this is not as clear because we've got a bunch of other stuff going, so let's get rid of it. But let's say if my entry's here and my average exit is going to be here. Let's use that line. Let's repurpose it, okay? Therefore, my risk is this much, okay? I'm calculating my risk is this much, and then I can see at the same time my reward is only potentially this much. And you might find, I wish that was an arrow, you might find that Regis is the best looking setup you've got until you get to the point where you take your 4 or 5 that you really love for the day and then plug it into this idea of, okay, well, what's my reward, what's my risk? I've got 3 trades here that don't have any overhead resistance. They're all blue sky. Okay, well, they probably deserve to get in ahead of Regis. I've got another one that's a bit more of a turnaround play, because Regis ultimately is a turnaround play, right? I've got another turnaround play, but it's got 2-to-1 or 1.5-to-1. You know, we can see Regis has barely 1-to-1, so it might fall over there. So this is extra layer of Tradecraft we need to overlay on top of all of our setups. I know that was a long explanation. Let me catch up. HMC is the next one. This one is for Peter. Zoom normal. You sure you didn't get that? Shaking his head. Let's go to here and here. I like this one. There's absolutely nothing in there that's telling me that we shouldn't be full risk position at this point in time. So if that's the case, then we obviously are fully allocated. Can I add a third? I don't see why not. I know the last candle is not white, but it's still a good candle because of that little gap up, isn't it? It's, you know, if you add the gap in, it's still a downward pointing shadow. It's still an indication, I believe, of excess demand, and it's, you know, also closing in a high in terms of what we can see on the screen. So that would be FRP. And you could also, well, I won't put next high candles. I don't think you have to wait, so I'll just go plus 1/3. But yeah, you could also wait for another high close if you felt that way. But happy with that one. Very, very close to 10 out of 10. CMM is good, not as good as HMC because there are some clear supply side showings here and concerning supply side showings. That is the candle here that really worries me. It's coming up pretty well though. Are we through the balance point of that candle? So the 50% retracement of this candle, don't worry about the 50% retracement of all the other stuff, because the other stuff doesn't really mean a whole lot. But certainly for me, I would look at the balance point of that candle as an absolutely critical level, just in terms of who's winning the battle that we want to get back above. If it can do that, I'll feel far more comfortable about a full risk position on this. Otherwise, I quite honestly, if I saw that candle, I would have got out a third immediately. Do not pass go, do not collect $200. I might have even dusted a couple of 2/3 there, because not only was the candle just horrific in terms of what it's telling us about the supply side, it also closed beneath that trough as well. So a little point of demand was taken out on that move. And possibly then even, well, it actually didn't close beneath this next trough that it made. So probably just hanging in there on a third, perhaps on the basis of that long-term trend ribbon. So look, where am I on this one? I can absolutely see every reason to hang on to that third. That's not a plus third. I think 1/3. It's not letting me do it, so let's just go RP at the back here. Maybe it'll let me do it now. I think we're at a 1/3 risk position. Let's get above that balance point. I'm going to feel more comfortable in holding the third. I don't think I'm adding. What could get me to add? I'm really concerned about this point of supply up here. I think it is an important one. I would like to see us approach it with some decent candles and then a dink that possibly even comes back no further than that balance point even, and just some nice candles in this area here. So that I will highlight green, but just watching kind of what happens here. If I get some good demand side candles in there, that's when I'm looking to add risk on this. I'll feel comfortable enough that that point of supply is no longer an issue. And then let's hope that, this is ultimately, I'm guessing, a blue sky trade. So let's give it every confidence that it can do that. But just a little bit of caution for now, I think, is warranted, Peter. 360 is Peter's final one. We talked about it a little earlier on. There's no caution required here. Throwing caution to the wind, full risk position plus 1/3 if you don't have it. Very happy with that one. And I might just change that colour so we can read it appropriately. Let's go to Adrian's RSH, which I must admit I'm not familiar with, and it's because it hasn't come up in my scans due to liquidity filters, is my guess. But I wish it had come up in my scans because it actually looks really good, and I reckon that's the candle there I would have put it in. I think you all know why, maybe even here. Although I'm guessing on that day, the volume wasn't bad. It was substantially above average. So look, either of those arrows, one clearly more aggressive than the other, I think is a valid plus 1/3. This one's not far away from it, but probably wouldn't have got my money just because of that upper shadow. But that one, I think, is certainly warranted if you were sort of playing along with this one. Today's candle, I think, unfortunately, just with that upper shadow, just is keeping me out of adding further risk to this one. Certainly happy to maintain the risk I've got. I'm also looking up here in terms of reward to risk for adding a trade today. I don't think it's there because, again, I won't do all the arrows that we had before, but you kind of get the idea in terms of Tradecraft with an entry here. If the first, that is a big demand side candle, if our first inkling of an exit would be there, the second inkling of an exit is there. And if we just change colour now and say that, let's use an orange arrow, that's kind of roughly my risk, and therefore, we're probably not quite pushing 1-to-1. Well, maybe we are. Let's go copy paste. And I know the arrow's pointing the other way around, but at least we can see, well, there you go. You actually do have 1-to-1 into that zone. So in theory, I just need 1-to-1. That's all I require. I don't need 2, 10 or whatever. That's the minimum requirement for me, because why would I risk more than I stand to lose? But once I get to the end of my process each day, I'm going to have a better idea of what is on offer in terms of reward to risk. But I can say for now, because we don't do that process here, okay? So I don't know where you're going to end up. But I can say for now, certainly FRP on this one. But just going to pass on the plus 1/3. OCL is the final ASX offline request. Pretty sure we talked about this last week because we talked about that red dashed zone that is just off screen. I identified that one last week. And I said, let's see how we go when we get there. And we've talked a lot about points of supply today. We've talked about points of supply, even going back a ways. And I don't think you would believe it unless you saw it sometimes. But it is manifesting. I mean, the supply from this peak here all the way back in November 2022, this is 2 years old. It's a major point of supply, in November 2022 is having an influence on the price action over the last couple of days, maybe even 3 days, because of the just upward shadows here. How much of an impact is it having? I put to you a small impact, a modest impact. Okay, why is it only a small impact? Well, probably because it's 2 years old, and the investors that have been waiting and waiting and waiting and waiting to finally get break even. Think about the pain and the agony that they experienced through all of this choppiness to finally get back to break even on this trade. Many of them have probably left already. So I'm not seeing a lot of motivation there, which is a good sign, but just don't be surprised if it stagnates here for a little bit. What do we need to see to get more excited? You can see the last time we looked at it, there was an FRP there. I'm going to copy and paste that and put that here, because I still think we are FRP. There's nothing so sinister there that would tell me to not have a full risk position at this stage. That could change. If I saw this candle pop in here after that one, I think we've got to manage some risk here. And just heed the signs and just say, well, it's actually stronger than we thought it was on first pass for whatever reason. But it's not there yet, is it? So not stressed out about it. The next thing I was going to say is, well, what would get us into more risk here? What would cause us to increase our risk? It wouldn't surprise me to see a little higher high and a higher low tomorrow, turn that into a peak, and then it just really is how we respond to that. Just a little dink here, respect that point of supply, next high close, a nice white candle, next high close, plus 1/3. Why? Because when we clear this point of supply, the reward to risk on this trade now changes. It changes. Every time you clear a point of supply, for a stock certainly that is turning around, isn't it? Stocks that are blue sky, this is not as relevant. Let's maybe make that red to be consistent, and we'll extend it across. And maybe we'll, take the line off that, the dash line off that. Well, I was hoping it would change the reward to risk more than that. It changed it in terms of, there's little reward in trading in here, but when we get above it, well, that's our next level. And if we have a stop, say, under that trough there, you can see that's your risk level, and then that's your reward, if you're going to work it out. I was hoping that would be much higher, and then I could say, we'll see how it has opened it up. It's opened up our reward to risk possibilities. Anyway, I can only work with the case studies that I have. That is the final offline request. Let me head to your online request. Thank you for being so patient. Hi, Carl. Thoughts on silver, which I did the silver chart. So I guess if we go to a silver ETF, which that might well be a US one you've got there, Adonis. So hold that thought. We'll do that when we get to the US. But you kind of got my thoughts on the silver chart. There's no point doing, Adonis is talking about a silver ETF. There's no point talking about an ETF because the ETF is moving based upon the commodity. So we'll talk about the commodity. But Avant, in the meantime, has QBE, which has fallen on hard times. There was a time, certainly back here, where it was doing everything we wanted to do. It was, would have been in my list regularly, and then the trends changed. I think there's a very neutral trend here. At best, this is starting to be a turnaround setup again, but the candles aren't emphatic enough for me. We've got a few white candles, but it's really, they're a little bit undecided in what is overall a pretty good market. Even if we were to find a setup here, we've got a point of supply there, and then what should be a major point of supply here, it's a long way back. But, look, if it continues to do the right thing, and I think the earliest I could consider this would be in the green box with some nice candles showing me that this long-term trend ribbon now is acting again as a point of demand. That could get me interested there, but they would have to be just the best candles, the absolute best candles. I think this one is a long way off. Now, I'm not saying I don't think it's going up. It actually probably will go up. There's enough evidence to suggest the balance of probability is turning towards a state of excess demand. But do we just want, that's got a balance of probability of excess demand or demand. This is the absolute best thing I can do with my money, and I think this will not come into, like if we did 50 stocks today, I don't think this will be in the top 20 or 30, to be honest, given the way it's looking right now. Let's go to Duratec, which would be in the top probably 10, certainly the top dozen. The only reason why I would mark this down is because of its now proximity to what is potentially a supply zone up here. And I say potentially, it was a supply zone in the past. We know that for a fact. This is a major point of supply. There's no doubt about it. It's also a minor point of supply here as well. But is the supply manifesting itself at that level? And don't forget, there's always two sides to the equation. We've talked only tonight about this idea that there are people who have this ex post regret, which is why support and resistance manifest, right? Ex post regret ultimately. So we've talked about this idea of ex post regret in the market, but don't forget there's a demand side as well. So that demand side just chewed through. There probably were traders, investors bailing out there because they bought in here and this was break even for them. They were there in the market. You can't see them because the demand side was just that much stronger. The demand side showed that much more intent in terms of what they were prepared to pay. And that's a good sign, okay? So it's not that there isn't supply there, it's just that the demand side didn't care about that supply. And that's good enough for me. So that's actually very impressive. I still would prefer, I think, given the circumstances, I know this is being a bit miserable, isn't it? Because it's such a great chart, requiring just a little dink, just a little respect of that zone, and then, on the next high close, I will change the colour of that to represent this. And if we had potential in this green zone here, in this green zone here, which now everything has gone to undo, so that's fine. Let's go there and do that. We'll end up with the same result. So in that zone, the right candles, I think, yeah, you could get quite excited about this, because remember that objective one, where I unfortunately discovered that there was a point of supply just above, that kind of ruined my case study. There's nothing here. This is blue sky. So what it does is it does change. Once you get past that big point of supply, it changes the reward to risk on this trade substantially, okay? That's the importance of it. So very happy with that one. Let me just officially put on my position here, FRP, but not plus 1/3 at this stage. As good as those last candles are, not plus 1/3. And I think it actually will find it in tomorrow's feature charts, because forward facing, I don't discuss this with anyone else but the people listening here. So you guys will get a slightly different version, or have a slightly different understanding when you're reading that watch list, because you go to the next step. Those watch lists for everyone else are just, this is a great setup. But you and I together, we go to that next step of, well, what's the reward to risk? And at the moment, I still think we're dealing with this major point of supply. Let's go to Avant's third one, which is AD8, which is absolutely no reason for me to talk about this here, Avant, unless you're looking at it for a short, perhaps, because there's nothing there. If I squint, maybe there's a bit of a base pattern through here, but I don't have the telltale signals for at least an aggressive trade, which would be at least an uptrend, rising peaks and rising troughs that you could see. I mean, if I squint, maybe there's some there. Predominance of white candles. I do have a clear volume signal for a low though, and that's beneficial. But this is very much neutral here, very much in the balance between long and short. So there's no interest for me at all in Audinate. Let's keep going. We're going to go to Robert, who's got a stock I am very interested in, and that's Vulcan. And I did shortlist this one. I reckon on that day it made a feature, and maybe even on that day there it made a feature. And it's certainly going to be a feature, I think, tomorrow, with the last candle, which is absolutely just a smashing display, isn't it, by the demand side, literally smashing through what could have been a very pesky point of supply here that really Well, did it smash through? Didn't quite smash through. But it's smashing through. I don't think this is as major a point of supply. Well, in fact, it's not, because there's no short-term uptrend on this side. So this is actually just a minor point of supply. It's a regular point of supply. Certainly this is a major one. So to compare and contrast this between this one and the one we discussed, Duratec, and why I was a bit more cautious about Duratec and where it was. I don't think we have that issue here because we're not at this one yet. But in terms of Tradecraft, and you working out, well, where does Vulcan sit? Certainly just on the candle, certainly just on the price action, the volume, it sits very strongly, but then where does it sit in terms of our reward to risk? And unfortunately, when we are dealing with turnaround setups like this, that's what we have to deal with, part and parcel. And we still want to have a mix of setups in our system. So let me just label where I'm at on that one. I'm going to go FRP plus 1/3. I think pretty straightforward for Vulcan. Let's go to Robert, who has got Macmahaon next, which is going well again, and it's a bit of a relief because I thought it was in trouble here. Did it give us a reason to knock out a third? Not really. None of those candles in and of themselves are bad enough to warrant us doing that. It didn't really get beneath this peak here. It didn't close beneath it. Sorry, this trough here. So that's okay. It kind of just hung in there, actually. So for that reason, I can't see any reason not to go FRP. I'm not going to go plus 1/3 because of that upper shadow there into what is now a point of supply. Not a major point of supply, just a regular one, because there's no medium-term downtrend on this side. There is no series of lower highs, lower lows, followed by high highs, high lows, and then lower highs, lower lows again. These two candles are equal. So therefore, call it a technicality, call it whatever you like. That's my rule, and the rule is consistent. That's a point of supply, and we're just seeing some of the manifestation of that supply in today's shadow. Full risk position for me, but not needing to add a third just yet. Let me get rid of that, don't need it. What would allow me to add a third? Any kind of dink from here, right? Any little pullback in the light green box there. A nice high close, and then happy to go, because we're just seeing how that supply manifests itself, how strong it is, and what the demand side's response is to that supply as it manifests itself. And if it is proven to us that the demand side is strong, despite that supply exerting influence, we are having greater confidence now in this stock's ability to make the next run up. Let's go to DUR. Is everybody okay? You've gone very quiet. I just want to make sure you're all still with me and you haven't fallen asleep like my son, who's, I'm not kidding, I wish I could turn the camera around. He's literally sleeping on the couch in my study here. I think I worked him over on the supply side, completely put him to sleep. Hopefully I haven't done that to you. Obviously we've talked about Duratec. I don't need to talk about that one again. That's your three there. Robert. Going to Andrew, EBR. He has had a big few days. This is I don't know what to make of that chart. Not the least from all my scratchings, but it is a very overlappy chart, isn't it? Shadows up and down, lots of indecision, and maybe we just leave it there. Like the leopard doesn't change its spots. When it moves in a very sporadic kind of way. Look, there's not really anything in terms of setup there. Potentially, we do have a big upward pointing shadow. We've talked about how that manifests supply. A little dink here, followed by a rally, and it would confirm, therefore, that the long-term trend ribbon is again acting as dynamic demand. So that's important, and only then could I consider it. But no, there's just nothing happening here. So don't forget, you really should be. I think not for my sake, but for your sake, you should be saying, Carl, this is why I think about why I want to know about this one, because I think it's close to. I mean, if it's just out of just general interest, I don't think there's a lot of learning in that. It's not exactly something that you would look at that and go, oh, well, that's just automatic. We have to do more research there, Andrew. Comments on Bitcoin. We'll do that when we get to the TradingView window. So Dash, don't worry, I will catch it there. Nicola saying, hi Carl, a bit early in the session, but can you share your search parameters, liquidity filters that you use when you're looking at US stocks? I can't. Sorry, I won't. I have to keep something to myself. But I can tell you that I'm looking for stocks that are not in long-term downtrends. So that's pretty obvious. Okay, so that's very interesting when you think about it. They don't have to be in long-term uptrends, just that they're not in long-term downtrends. I prefer to see stocks that are, again, not in short-term downtrends. And I might be looking for things like strong candles towards the end. I might be looking at things like, higher troughs being set, things like that. Building points of demand. As far as liquidity filters, that's really a very personal thing. I think I've got on the ASX ones, happy to share that because it's very little intellectual property in that one. Minimum average turnover over the last 21 days, which is one trading month, of $200,000 worth of stock. Okay, so turnover is just volume times the closing price and taking the average of that over 21 days. And some people might feel more comfortable with $500,000 or $1 million traded on average on a daily basis. Some people don't care. They won't even have a liquidity filter. So that's a very personal thing. Let's go to Jackie. Jackie's got audio but no video. Oof. Sorry, Jackie, I've only just seen that. But Nicola has said her video is good. So hopefully Jackie managed to get hers back. Different Robert, what do I think of DXB? I think DXB looks pretty good, actually. I did put it in on this day here, didn't I, Robert? So that one, that's maybe why you're asking about it. But we've got the nice big white candle. We've got the long-term trend ribbon acting as demand. We've got a little bit of room between us and the next point of supply up here, which I don't think ended up being a major one, pretty standard here. Certainly there's one sort of there, and then there's one up here. So that room, I think, encouraged me. You can see before that, the leopard was fine. The spots were good. very, very clean price action, so that's okay when we compare it to, say, EBR Systems, because they're actually very similar setups. And not really a little dink here, but yeah, not really necessary, I think, in that circumstance, because actually, candles and volume are actually pretty good. Today's candle's not ideal, but it's not enough to push me off the trade, so I'm still FRP. I'm pretty happy with it. Obviously not adding a third on that last one because there's just not the right candle to allow that. So FRP is probably the best I can go there. Let me get rid of that. Let me turn those into red. So next time we come back and we look at it, we know what I was thinking. Going to go to PAA, which is, Farm Australia, not one that I'm familiar with. We have done some working on it in the fairly distant past, though, haven't we? Where I probably said something to you on that day, like species ending event. Oh, wowzers. SEE on that one. It looks good today, actually. I'm pretty happy with that. I think this is a really nice little turnaround setup. The only thing that might just hold it back, let me move this here. We've got a little bit of a potential supply zone there, and we're pretty close to it. So just for that reason, it's sort of moving more into the ho-hum basket. But if there's something about this company that you really like, you know the story inside out or whatever, and you're that way inclined to want to own it, or certainly at least hold it, then no issues from me. So I'm happy with it. I don't think I'm going to go plus 1/3 just on the basis of that point of supply. But if you wanted to, then you wouldn't get any objections from me at all. Okay, I'm just telling you how I feel. MTM. This one is looking... there's much more upside movement. Look at the volume. There's much more interest as well. But again, turnaround setups, and this is probably the theme for tonight, isn't it? Is our proximity. And I wonder if it's because, we're seeing some interest come back into these smaller cap stocks. And that's causing us to find more of these turnaround plays, okay, because they have been beaten down for so long, and we're actually starting to push into some of these overhead resistance points. Look, I think it's great. I'm going to go ditto on the last one and go FRP, but I can't give you the plus 1/3. Although, again, if you know the story and you had it, well, you would hold it. But if you wanted to explore it, then you won't get any major complaints from me. Let's go to Francine. What do I think of Bluescope BSL? BSL, there we go. It's not bad. It's maybe a little bit more like the EBR than the DXB, but not something I'd be all that interested in just yet. And again, we talk about the leopard not changing its spots, and I think clean price action is a bit of a habit or a trait, and this doesn't really have a very good history of clean price action. Candles are very overlapping, lots of shadows, flip-flop between white-black candles. But putting that aside, obviously this is the important thing here. If we start to see high peaks and high troughs sort of around here, because we have therefore pushed through that point of supply, we may be able to come up in some time and work our way towards that point of supply up there. But I think that's kind of what we're talking about here. We're talking about working our way with great difficulty in the best case scenario between 22 and 24, and then who knows what's going to be 2024. So this is not the worst setup we're going to see today. It's got some ticks in some boxes, but I would put to you, this is very, very far from the best setup we're going to see today. And that's not trying to be nasty. That's just trying to encourage you to really focus in on the best traits, the best manifestations of excess demand we can find. Will we find it on AGL? Again, there's lots to like here. The long-term trend is very, very strong. The short-term trend's not terrible, but it is starting to weaken. Not only in terms of the short-term uptrend is starting to flatten out, the short-term uptrend, which has had a very good track record of supporting price, is less so supporting price here. We're starting to see black candles in the zone. The other thing here is watch down here. We don't often talk about this, but it's certainly relevant in this particular case study, because what strikes me about this, it's a big cap stock. It should be moving at least as good as what the market's doing, and it's not. Okay, so whilst the short-term trends here aren't terrible, when we consider those short-term trends within the context of a broader market that is making a strong short-term trend showing, this is even more disturbing. Obviously, you can see lower peaks, and it's all happening where? Like, why is this happening? We're talking about what is happening, why is it happening, and it's the theme of tonight. Tonight's theme is major points of supply and how they cause problems down the track, how they manifest themselves in future demand and supply. Okay, and I think that's what is capping AGL until AGL deals with that point of supply and shows us with some tremendously emphatic white candles. Why would you waste your time and effort? Because time and effort are finite. They are finite concepts. We've only got so much time. Nobody can argue with me about that, but I would put to you as well, we've only got so much effort. So until you see that particular candle there, Francine, there's nothing to see here. There's nothing to do. Well, let's go to Perry. Perry's got AI1. I was going to go A11, but I don't think it's that one. Let's go AI1, which I've never heard of. Okay, again, not coming up probably on my liquidity filter. Doesn't mean it's bad, just means it's not meeting my liquidity filter characteristics. But like I do most of the time with Perry setups, I go FRP, full risk position. If you have it, happy to hold on to every single share and not sell one of them. But if you don't have it, I'm also happy to add a third. It is looking like one of those textbook turnaround plays. Look, it's gone from absolute sketch to, I don't know if they've done some sort of reconstruction or recapitalisation, but it's starting to show better price action as well. Is this going to be the strongest one we're going to find tonight? Look, I don't know, but I think it's up there because with so many turnaround setups we've seen have had to bash into big points of supply, and there just aren't any here. So that's good as well. Seeing a bit of volume coming in, and obviously the candles at the end, they're pretty good. So very happy with that one. CTM is the other one. I mentioned that a little bit earlier on. Oh, dare I say this is my favourite turnaround setup so far. Let me turn that one red and extend it across. And you can see there, see the difference it makes when you can close above those major points of supply. There's actually two of them here. And such an emphatic candle as well. Would have liked to see, well, I guess we did remove the supply, didn't we, here? There's a little bit of extra volume there, but not much. But maybe there just is no supply left there, and that's why we had such an emphatic close in the end. Where's the next point of supply? Look, there's going to be a little bit here, no doubt about it. And then there's probably a bit more, I'm going to say sort of around about there. It's going to kick in those 70s. But with a stop, well, not a stop, it's a silly word, but if we think about where our sort of a risk area is, and if that's our risk area there, and we take that and we copy it and put it there, you can see we're probably not making one-to-one into that first area, okay? That could be somewhat of a concern. I'm okay with it. I think it's such an emphatic signal, I'm happy to give it a go. I also think that area is not as important as that area there, that bigger one. I think that's the real one. Well, look, I'll put it back, but I think we're okay. I think we're okay in the water. There's certainly enough in it for me to warrant taking it to the next stage. Happy with that one. Let's go to APX. I mentioned that earlier on today. Well, this again, I can't get away from this theme, can I? Today, it's smacked into the point of supply here, and it had to deal with it. And you can see supply did manifest itself there, and it was a process of working through that demand side, finally just removing them physically, removing them from the market, removing those shares, and finally, hallelujah, I get the perfect case study, don't I? Perry, where I can zoom out and say, look, there's actually really nothing here. The reward to risk on this trade is now completely changed because we've closed above that point of supply. So I'm so glad you gave me that one. It's a bit of a relief. Let's go, what do we say, minus a third? And I have been saying minus a thirds on this for, well, I don't know what that's about. Maybe I did on that one. And if I did, then I was wrong. And I do get it wrong from time to time because I think we're back here. Let's go to CAT, which, look, we said FRP. Today's candle's not ideal, so I can see why Jackie want to ask me about this one today. Hopefully your vision's back, you can see it. I don't like that candle today. And it tried to push up, and you can see it, that upper shadow there again. So at one stage it was pushing up. It was showing a nice white candle. And probably, Jackie, you looked at it maybe in the morning, you thought, oh, yes, Kat, look, I knew you were good. I knew you were going to come back. I knew you were going to do right for me. I'm so glad I gave you that, that faith. And then you might have come back at the end of the day and you thought, oh, what the hell happened? And we've actually got some, almost twice the average volume here because of that move higher in the morning has dragged in a bunch of people who are waiting for that signal to buy. And don't forget, if you're a big fund manager and you want to sell, right, because you think a stock's overvalued, and there are fund managers out there, no doubt, that look at CAT and say, that's overvalued, okay? And there are other fund managers, don't worry, Jackie, who look at this and say, it's undervalued. We know that. They're buying. We know that they're pushing the stock up, okay? But there will be fund managers that think it's overvalued. And they have this feeling that the best time for them to get set with their sales or to get out is when there's a frenzy of buying. That's how they get the best price. That's how they can shift their big position with minimal impact on the market. So they saw some liquidity come in this morning and they hit it. And that does concern me because now we've got a bunch of traders who got in the morning thinking it was great and now looking at that candle like us going, but this is not as good as I thought. I thought I was going to get a nice quick win on this. I was going to take it from $2.50 to $3. Now, I reckon if I could get $2.50 for this, I'm going to get the hell out of it. So it does create latent supply towards the top of this candle, and we know that supply is only going to reinforce the supply that's already in the system from here. That candle concerns me. Is it enough in and of itself to go minus a third? Probably not, but it's borderline, okay? Because the price action before that wasn't exactly perfect. Not terrible, not perfect. I'm just going to say, look, officially, I think we're going to give it another black candle. And if another black candle occurs, we're going to manage some risk. I think we're just going to give it the benefit of the doubt one more time. That might be famous last words. But if we saw something like this, that is going to change absolutely everything for us, for me anyway. It's what it does for you is whatever it is for you. But I think that sort of a candle, we're certainly going to take some action here. I reckon if I saw that sort of a candle with that sort of a close in that sort of a position, I'm doing more than a third. I'm doing 2/3. But that's order of magnitude. I think I still want to hang on to a third here just in case. Okay, so if that was to occur, so let's just move that there. Then I would still, if it lets me have it. No, let's do it. If the mountain won't come to me, I might have to go to the mountain. Okay, there we go. Plus 1/3. And in the meantime, though, famous last words. Let's go FRP, or maybe I'm reading too much into it. But anyway, a really interesting case study, I think, Jackie. Thank you for that one. Haraju, Scott, don't put any more in, because I won't be able to do them, because I only just looked at the time, and that is really, really over time. MM8. I might have the wrong one here. Haraju, MM8. Let me try something else. Let me go here, MM8. Aha, that's starting to make a little bit more sense for me. There you go. What a wonderful looking chart there. Of course, we should only ever look at it with default. So it's only getting better for me. I'm just, it is bittersweet doing these with you tonight, because you're highlighting a bunch of setups that I haven't seen because of my liquidity filter, but really wish I had seen. And you can see that my system would have been all over this as a turnaround play. But it still would be indicating a full risk position and a plus 1/3 on that last candle, because there's really nothing in the supply. You can see over. Can you see where I'm pointing? You can't see where I'm pointing, but I'm pointing over here because that's miles away. And the only conclusion I can draw with the strength of that last candle is FRP, and still plus 1/3 for me. Yeah, I'm happy to have some risk on that one. Great pickup for you there, Haraju. Well done. Haraju also getting I've gone to the wrong place, AI1 as well. So really tuning in on those turnaround setups, Haraju. Well done. Perry's got some US stocks. We'll do those in probably 24 seconds. Nicola has got some US ones, as does Matthew as well, although no, they're all USAs. Well, that's it. I didn't have to do any more of those. Let's switch over to the TradingView screen now, and we're going to do the offline requests, kicking off with Jason's requests for MSTR. MSTR, which is Monster Drinks? No, MicroStrategy, not even close. What's Monster Drinks? MNSTM? Don't know. Let's go with MicroStrategy. And I think this looks fantastic. There's your point of supply. That's the theme of the evening, isn't it? And we can see, look at those two little upper shadows and the dink as well. Well, this is wonderful, because it is just showing you exactly what I've been talking about, how we should respect major points of supply from the past, but not be frightened of them, okay? They manifest themselves. If they manifest themselves in a very moderate way, a couple of little upper shadows, a small black candle with a downward pointing shadow. That downward pointing shadow was a clue, wasn't it? That supply had it's almost an indication that the supply had finished. The demand was starting to come back in. And where did that demand come back in? Well, it came in at the top of that big demand candle. Don't underestimate the power of demand candles from the past. We don't need to see a peak or a trough to give us that explicit, there's likely to be demand or supply. The candles in themselves can tell us that, because that's what that's what happened. They tell you what happened on that day. It was a wall of demand. That demand should be there in the future. If it's not, then we'll know. But you can see that lower shadow poking into this old peak, this old point of supply, perfectly acting as now a point of demand. And also note the correspondence here and here. These are all points of supply that, once they were closed above, behaved as a point of demand. So I wish my son was still awake. He has taken himself off to bed, which I'm very glad about. But it's just so clear here how this is working. This is a perfect setup for me. I do need to look out the corner of my eye to make sure that there's nothing to worry about, and there isn't. It's all blue sky from here. So there's nothing left to do here but type in FRP and plus 1/3. And yeah, it could be a good, a video to bookmark, I guess, for future reference if you ever want to come back. And I don't recall us having so many of these kinds of discussion about points of supply becoming, or first being problems and then becoming points of demand in the past. It's a good little group of case studies we happen to have had tonight. Let's go to MANH, which is one we've done a few times recently, I'm thinking. Well, there you can see why. I don't know where the markings are, but I'm sure we've done this fairly recently, and I'm sure I would have put FRP plus 1/3 on it in the past, because there's no reason not to. It is the absolute exemplification of excess demand, isn't it? We've got nice price action there. We've got just perfect candles, perfect respecting of the short-term uptrend ribbon, which is rising beautifully, perfect respecting of the long-term trend ribbon, which is really starting to get some steepness into it now. Where, look at this. Look at this. Look at this area here, in line with that major point of supply. And you tell me, I want you to try and convince me that this isn't real. It manifests itself. But then the demand side has to build itself up again. Okay, it soaks them all up. And look at that candle there. In fact, that candle there is the identical candle, isn't it, in size and nature and positioning to the one we saw on the previous one, MSTR. Okay, MSTR is here, closing above that point of supply. And this one's just further along. Did I say that? I think I say that. Let's go to the next one from you, Jason, which is KMI, Kinder Morgan, if I'm not mistaken. And that one we have looked at recently. I can see the FRP plus 1/3 there, and it's no reason to be any different today, because it actually probably even looks better. I won't do the zoom out because we would have done it last time, and what a perfect looking chart that is. Thank you, Jason, for that one again, or at least reminding us of how well it's going. Next one is Coherent Group. Ditto. And I'm so glad we do the US ones at the end, because we do fight hard in Australia, don't we, sometimes, with all those turnaround setups. And me trying to make reward to risk, is there 1-to-1? And then we come over here and I go D, I go W, and we actually threw that one. Wouldn't that be funny if I'd gone to all that trouble and we were beneath the point of supply? No, we're not. We're above there. We're blue sky. So that's good too. Let's go FRP plus 1/3 on another perfect looking setup. Thank you, Jason. 4 out of 4 for me. Well done. Now I'm going to go back up your... Actually, no, I've got one more. CELH for Craig. Sorry, Craig. Nearly forgot you there. CELH. Celsius Holdings. Very interesting, isn't it? I wasn't expecting to see that from Craig. I do know Craig is an active short seller, though. So he didn't give me a note on this one, but I can only think he's going short on this. It's too early for an aggressive setup. Not to say that this isn't the low, and it might be $30 down, it might be $100 in 10 weeks' time, I don't know. But it doesn't meet any of my criteria for a buy at this stage, okay? It would have to do quite a few things for that to occur. I won't go through them because it's too late for that. As a short trade, Craig, if you're already short this little gap here on volume does concern me. If you were to see any confirmation at all of that gap and run and that volume, then I think you need to be reducing your short side risk. Okay, so a Friday's candle is fine. That's showing the supply coming back in pretty much where we hoped at that short-term trend ribbon. But this is a major shot across the bow here. This cannot be ignored. Even if you took advantage of this little pullback and knocked a third off just in case, and ran with 2/3 on this one. Okay. Or you can wait. Or you can wait for the next white candle. Okay, but watching. We're alert now. We're not alarmed, but we're alert that this trend could be changing here. Okay. In the meantime, if you want to go FRP on the short side, that's fine. Obviously, I can't talk about the longs because it doesn't meet any of my criteria. Let's go. That's it. Let's go to your online requests. And Brett saying, hi, Carl and viewers. Sorry, missed the start of the session. What happened to the feature watch list sharing? Is it possible to get access? Yes, it is, Brett. Wait for the recording. At the start of the recording, I talk about that, and I will send you the link in tonight's email. But I'm sure there are probably a few people that missed the start of that. That's fine. Let's go to KMI, which we have obviously done for Nicola, because this was also one of Jason's. So Nicola and Jason now starting to come into alignment. That's a good sign. Normally Jason and Perry are very close, but Nicola's sort of joining that group now. QTWO, Q2 Holdings. I think Nicola's probably going, well, that's nice. Carl's mentioning me in Perry's company, in Jason's company. Let's go here and here. This is exemplary as well. So this is another fantastic looking setup. Up there with the best of them that I've seen this evening, and we're certainly going to go FRP plus 130 here. I will have a look out on the weekly chart, but I think we're going to be fine as a hunch, but let us confirm. Oh, okay, yeah, look, I wasn't expecting that from what I could see, but we do have a little bit of a level here, around about 91, into sort of a little bit higher there, into 92.70. Might create a little bit of supply. There's a couple of decent peaks up there. But you think about where we are, let's call that like 91, 92.70. So if we took an average of that, it's sort of like 91.75 or 91.85 probably is more accurate. So if we think about that as our upside, we're trying to make 1-to-1 here. And with a stop sort of about $7 away, we're certainly getting in our minimum of 1-to-1 before we're getting up to that zone anyway. So I think we're fine there. Let's keep going with Matthew. Matthew usually pretty good as well. So let's Matthew pretty good. I think Matthew's better than pretty good. He's certainly given me a very good trade setup here. FRP plus 1/3 on the condition that we don't have anything too untoward out here. We don't. If you can't see it there, it doesn't exist. Okay, don't go any further out than your default zoom onto the weekly chart, because your weekly chart is a long time back anyway. Okay, don't overcomplicate things. Oh, but Carl, if I go back another month, there was this really huge point of supply there. Just keep it simple. You have to have an endpoint somewhere. Okay, you've got to be disciplined on that. FRP plus 1/3 on that one. Thank you, Matthew. Looks great. Let's go to RSI, not the relative strength index, but Rush Street Interactive. And it looks very good as well. A little bit of a point of supply here, but I don't think it's really giving us much trouble, is it, based upon Friday's close. Let's see if there's anything else lurking out there. And look, there potentially is, but nothing all that sinister until we miles away at 17. So I'm not concerned about that. I'm sure you probably looked out there as well, Matt. You probably weren't too upset about it, but nothing stopping me from going FRP plus 1/3. I really don't think that black candle's an issue, because we got so close to the top of it. If supply was going to manifest itself here, it really should have done it by now. So I think we're fine on that one. And we're going to do your third one, which is WGS, which is excellent as well. Obviously, we've looked at it in the recent past. Let's go back here. Well, I was going to say probably don't need to. So a little bit of a level there, isn't there? Around about 84-ish. But again, I don't think that's $20 away. It's not going to change anything here. Little upper shadow. Maybe a few of the other ones didn't have that shadow, but I'm being really picky here. And I think when you've got so many great setups, you can afford to be a little bit picky. But it's not going to stop me from doing that. It's still a ripper, absolute ripper chart. We're going to head into Perry COHR, which we have. Didn't we do that one? It rings a bell. Yes, I'm sure somebody's asked me about that one. Yes, of course, Jason and Perry in perfect sync again. Well done. Perry's also got KMI. Jason had that one. And TRGP. Targa Resources looks great. Let us have a quick look out here. And nothing there at all. how many times did we do that on our Aussie stocks? We just didn't, did we? Because there were there were points of supply on the daily chart. Like we didn't have to go to the weekly chart. We could see the points of supply there. There's really nothing here. It should really put into perspective for you, put into focus for you. If you're not trading US shares, maybe you want to think about doing that because you could be missing out. Let's go to the final batch, I reckon. There was actually Bitcoin I need to do before I do get to the final ones from Adonis. It's looking better. So, look, I've still got all my Bitcoin. Would I buy some more? Don't get me started. It's tempting. It's actually tempting to buy a little bit there at the end. Look, if you don't have any Bitcoin, if you've never had it, and you just want to scratch an itch, I don't mind adding some risk on that right now. If you're a long-suffering Bitcoin holder, look, when I say long-suffering, I'm up. I'm actually way up on my Bitcoin. So I shouldn't complain about it too much. Happy to add some risk on that one. Going to go to Adonis to bring us home. He wanted silver, and just to illustrate, I don't know which ones were you going for any of those. I don't know. I don't look at those. The one I look at is this one here. So SI1 exclamation mark. So this is the COMEX futures Adonis. You should have my watch list, so you should be able to get this one. Don't look at the one that you're asking for, which is capital SILVR. It's irrelevant. This is the one you have to look at here. This is go to the source. Okay, don't look at CFD providers and their charts. You have to be looking here at the CME because all of those are based off this one. So this is where we are looking, and we talked about it before. It is really just vibrating in the range, but the overall trend is still up. I mentioned last week I'm optimistic it can break through 33.50, but it will do it when in its own good time. ANET is the very, very good next one from Adonis. Another perfect looking US setup, and oh gosh, that looks even better on the weekly chart. Staggering. That is so good. And obviously FRP plus 1/3 on that one. Very happy with it. And the final one for us this evening, everybody, ORCL to round us off. Looks good, and I'm guessing you're probably already on this Adonis. It's got that feeling of not a new setup for you because it's got a couple of candles that haven't done anything. I think you're probably just on it and waiting for it, and I think you can continue to wait. There's nothing in there that's worrying me at all. I think those two candles are very, very mild pullbacks. So happy holder here. Obviously not adding risk because those candles don't warrant it, but certainly FRP for me if you've got it, and that is us done for this evening. I'll just double check down the bottom list that I haven't missed anybody. I don't think I have, so let me head back over here to our PowerPoint presentation and wrap us up to remind you that everything we've discussed this evening is general in nature, has not taken into account your personal financial circumstances or particular needs, so before acting upon any of this general advice, you should consider it carefully, seek the help of an actual professional to determine its appropriateness for you. Trading is risky, you might lose money. It's always you who's responsible for the stuff you do and not me. As always, it has been an absolute pleasure chatting with you this evening. All the best for your trading and investing until we catch up again. Bye-bye for now.